Critical Man Pictures presents the Forex video training series, Purple Belt, Trending and Ranging. A trending market is one where price is generally moving in one direction. Sure, price may go against the trend every now and then, but looking at the longer time frames would show these are just retracements. Trends are usually noted by higher highs and higher lows in an uptrend, and lower lows and lower highs in a downtrend. When trading a trend-based strategy, traders usually pick the major currencies as well as any other currency utilizing the dollar because these pairs tend to trend and be more liquid than other currency pairs. Liquidity is important in trend-based strategies. The more liquid a currency pair, the more movement, aka volatility, we can expect. The more movement a currency exhibits, the more opportunities there are for price to move strongly in one direction as opposed to bouncing around within small ranges. Other than eyeballing price action, you could also make use of technical tools you have learned in previous sections to determine whether a currency pair is trending or not. A way to determine if the market is trending is using the Average Directional Index, or ADX for short. Developed by J. Wells Wilder, this indicator uses values ranging from 0 to 100 to determine prices moving strongly in one direction, i.e., trending, or simply ranging. Values more than 25 usually indicate that price is trending or is already in a strong trend. However, the ADX is a lagging indicator, which means it doesn't necessarily predict the future. It is also a non-directional indicator, which means it will report a positive figure whether the price is trending up or down. Take a look at the example. Price is clearly trending down, even though the ADX is greater than 25. Moving averages in a trending market. If you're not a fan of ADX, you can also make use of simple moving averages. Place a 7, 20, and 65 period simple moving average on your chart. Then wait for all three SMAs to compress together and begin to fan out. If the 7 period SMA fans out on top of the 20 period and the 20 period is on top of the 65, then price is trending up. On the other hand, if the 7 period SMA fans out below the 20 period and the 20 period is below the 65 period, then price is trending down. One tool that is often used for range-bound strategies can be helpful in trend discovery. We're talking about Bollinger Bands or just bands. One thing you should know about the trends is that they are actually quite rare. Contrary to what you might think, prices really range 70 to 80% of the time. In other words, it is the norm for price to range. So, if price deviates from the norm, then it must be in a trend, right? What is one of the best technical tools we've mentioned in previous lessons that measure deviation? The answer, of course, is Bollinger Bands. Bollinger Bands actually contain the standard deviation formula. Don't worry about being a nerd and figuring out what the fucking formula is. Here's how we can use Bollinger Bands to help us determine the trend. Place Bollinger Bands with standard deviation 1 and another set of Bollinger Bands with a standard deviation 2. You'll see 3 price zones: the sell zone, the buy zone, and the no man's land. The sell zone is the area between the two top Bollinger Bands and the standard deviation 1 and the standard deviation 2. Bear in mind that price has to close within the bands in order to be considered in the sell zone. The buy zone is the area within the top 2 bands of SD1 and SD2. Like the sell zone, price has to close within the bands in order to be considered in the buy zone. The area in between the standard deviation 1 bands is the area in which the market struggles to find direction. Price will close within this area is really in no man's land. Price direction is pretty much up for grabs. The Bollinger Bands make it easy to confirm a trend visually. Downtrends can be confirmed when price is in the sell zone. Uptrends can be confirmed when price is in the buy zone. A ranging market is one where price bounces between specific high and low prices. The high price acts as a major resistance level in which price can't seem to break through. Likewise, low price acts as a major support level in which price can't seem to break through. Market movement could be classified as horizontal or sideways. One way to determine if a market is ranging is use the same ADX that we discussed earlier. A market is said to be ranging when the ADX is below 25. Remember, as the value of the ADX diminishes, the weaker the trend. In essence, Bollinger Bands contract when there is less volatility in the market and expand when there is more volatility. Because of that, Bollinger Bands provide a good tool for breakout strategies. When the bands are thin and contracted, volatility is low, and there should be little movement in price in one direction. However, when the bands start to expand, volatility is increasing, and more movement of price in one direction is likely. Generally, range trending environments will contain somewhat narrow bands compared to wide bands formed horizontally. In this case, we can see that the Bollinger Bands are contracted, and the price is just moving within a tight range. The basic idea of range-bound strategy is that a currency pair has a high and low price and normally trades between. By buying near the low price, the trader is hoping to take profit around the high price. By selling near the high price, the trader is hoping to take profit at the low price. Popular tools to use are channels, such as the one shown above the Bollinger Bands. Using oscillators like stochastic and RSI will help increase the odds of finding a turning point in the range, as they can identify potentially oversold and overbought conditions. Here's an example of the pound US dollar. Tip: the best pairs for trading range-bound strategies are currency crosses. By crosses, we mean those pairs that do not include the US dollar as one of the currencies in the pair. One of the most well-known pairs for trading ranges is the Euro-Swissy. The similar growth rates shared by the European Union and Switzerland pretty much keep the exchange rate of the Euro-Swissy stable. In conclusion, whether you're trading a pair that's in a trending or ranging environment, you should take comfort in knowing that you can profit whatever the case may be. By knowing what trending environment or ranging environment are and what they look like, you'll be able to employ a specific strategy for each.